Welcome back, and joining me for a closer look at what's played out on the market scene today is Cobus Potgieter from Southern Cross Capital. Thank you so much for your time, Cobus. Exactly how are markets starting off the week, where it seems that everything is happening everywhere all at once?
Yes, well, obviously overnight we received the news of the EU-US trade deal. Initially received very positively by markets, and it looked like the momentum we've seen over the last weeks would continue. But towards the end of the day, as we saw commentary from disparate EU leaders, um, that optimism, you know, got dialed back a tiny bit. It seems that some of the specific economies, some of them are reasonably happy for the compromise, having priced, that this kind of difficulty. But the ones that are reliant on exports are less happy about it. So we've seen specifically the Germans and the Slovaks, who are you rely heavily on auto exports. They feel this deal is unfair, offering 15% tariffs whilst zero rating certain US goods in Europe. It seems a bit lopsided. You're dealing with a bully with a big stick. So and other leaders, such as the French Prime Minister, alluding to the possibility of activating, you know, once again, that word reciprocal measures. So actually going ahead and taxing the tech companies, which is one of the things that the Trump administration balked against. So that's taken some of that optimism out of the market. But I think looking forward, we should be more concerned about our own trade deal.
Yep.
We know they're grinding with China, and there's some signs that they'll get to some kind of a deal. But it looks like the smaller economies will once again just be getting a lecture on the 31st, informing them of what their deal is, as opposed to getting the time of day to actually negotiate something. So, that's left a bit of uncertainty. I think we're all hoping that 15 is the new baseline and everybody, that's sort of the standard deal, but there's no way to tell if that's going to be the case.
Yeah, so many moving parts, and of course more information will be revealed as we head closer to that 1st of August deadline. Well, I mean, amid all of that, there's also monetary policy coming into the fore, particularly from the South African Reserve Bank and also the Fed this week. What is the expected tone of monetary policy, especially on tariff week?
Whew. You know, essentially, we know our own Reserve Bank in particular likes to use uncertainty as a shield, to defend their hawkishness. I think we're expecting a 25 basis point cut. The real rate is too high. The rates they've frankly been too hawkish. Relative to the past, relative to where rates are, relative to where the rand is sitting. The consumer is constrained, and there's no reason to do this because inflation is entirely benign and expected to remain benign for the near future, at the very least. However, again, it's about that forward-looking tone. They'll reiterate the uncertainty, and I mean, will signal to us, given what the split is on the actual committee's vote. That tends to be sort of a nice way to assess what direction we believe things will go down. Whether we can expect more cuts in the near term or whether or not they'll pause from this point. The Fed, on the other hand, not expected to cut. We think Jerome Powell they'll dig their heels in, and there the market is exclusively looking to that forward statement. We were looking for 2 to 4 rate cuts this year from the Fed, and haven't received a single one off the back of all the volatility. Given now, the dollar strength, some of that trend has reversed. Perhaps that gives them a little bit more headroom to move up one of those cuts. But again, they'll be looking at economic data, which we are also getting later in the week.
Yeah.
Any sign of weakness will make it easier to cut. But for the moment, the jobs numbers and the growth numbers in the US look so robust. It's difficult to really see the shift. A shift towards a more dovish stance from the Fed.
Well, talking about shifts, company Voltera has undergone a lot of shifts the interim period that they were reporting on. Production, though, dropping, financial metrics are down. The PGM miner also saying that it took a financial hit from the demerger from Anglo American. What did you make of that performance?
The first set of results post the demergers, they are always messy, and frankly, not necessarily through malice. Sometimes expenses get classified as once-off that are perhaps not as once-off, as management expects at that stage, because they haven't operated as an independent business up to that point. So there's a lot of teething that goes through the process, and we've observed this from other unbundlings from parent structures many times before. So that was to be expected, and the results were well guided in anticipation of this results publication. The dividend came in a little bit short, but the outlook statement remains quite bullish. We had the flooding, which of course affected output, but we had the CEO reiterating post results in an interview that, despite the buoyancy in PGM prices, and I mean, platinum's, the headline numbers, of course, bounced quite a lot. The other platinum group metals have bounced significantly less. We're still seeing palladium and rhodium lagging. They're starting to eke up now. But he says that this is not enough. The price isn't high enough to stimulate further supply. And if they believe, if they are correct in that supply remains constrained, and they expect in the next 5 years South Africa to decrease its output in totality by 20% per annum. Given the underinvestment in platinum mining, given that platinum has been suppressed for such a long time, that is actually quite bullish for the stock, of course, because it means the underlying commodity will continue to be in short supply. Off the back of the Chinese buying earlier in the year, we saw the supply just running out and stocks running low, and suddenly the price ekes up. So that sort of Goldilocks scenario, if you're an incumbent player, where you can make nice margins, but it's not really enough to push up supply, that's quite a positive outcome. So yes, the market has to reset expectations given the set of results, but the outlook overall for the stock remains quite bullish.
All right, we'll talk about bullishness. Let's get to your stock pick for today. What are you choosing?
So I've already had to chat about this once today, but we're going with City Lodge.
Okay.
Plays along with our SA Inc. thesis, and I called it precisely a year ago. If you add the nice couple of divvies you've received, you are precisely flat in the interim. It went through a significant restructure process post-COVID, when essentially the cash dried up. Because of an extended period of vacancy, and they didn't maintain the underlying assets, and then now, post the cash injection from shareholders, they had to go through significant renovations, which further disrupted the ability to, for that uptick in business when business travel returned. That's starting to bed down into the base now. We expect them to continue executing well, and we think that, given that it's one of the few stocks in the sector that hasn't recovered at all from those lows, there is significant upside. It is looking incredibly cheap, and as that business travel continues to improve, we expect them to benefit from that business activity.
All right. Well, thank you so much for your time and for your insights on what has moved investors' money today, Cobus. That was Cobus Potgieter from Southern Cross Capital.